Welcome to the Accendo Traders Group. This is our video trade plan for Tuesday, May 6, 2008. AccendoTraders.com. Effective trade plans delivered daily. And this is what we do, how we prepare ourselves each night to make sure we're on the right side of our trades, make sure nothing's coming up that's going to affect our trades. New people, go ahead and pause right here just so you can get an idea of what we do each night. And always, we want to make sure that we have a life and spend time with our families. First and foremost, when we're talking about what moved the market today, we have the Microsoft Yahoo news. Microsoft over the weekend, and we talked about this yesterday in our weekend wrap report, that Microsoft has dropped its bid for Yahoo. Yahoo wanted $37. Microsoft upped its bid from $31 to $33 billion. We'll see what happens. Obviously, Yahoo was down, not all the way down to pre-announcement of this deal, so there's still some people holding on to hope. ISM came in with an expansion number. Above 50 is expansion. Below 50 is retraction. We're expecting 49. We got 52, so that certainly was good news. And we have some other news. I think what's important also knows that crude market was down. Crude said, let's go. Ran to the hills, and we set some all-time highs there. Only two sectors ended positive, and all the major indexes were down. We were waiting to see what's going on with CLF after the market. Haven't found it so far. Briefing, earnings.com, Yahoo. It's about 5:45 to 6 right now, so we'll see what goes there. Upgrades, let's talk about Apple. They had their target raised to about 220. Google's target was upraised. Notice that we have two of our split plays, Busey and UMP were upgraded. Targets were raised. And the only downgrade was Yahoo. So tomorrow, we have no economic data. We don't have any reports coming out. Earnings-wise, the only really thing I saw before the market that really caught my eye was MGM, casinos. And then we have our split plays, CLF, WFT, Busey, and UMP. So let's go take a look at our flag list from last night. Okay, so as we begin to look at our flag list, you can see starting off with the NASDAQ, obviously we have a retracement day. Rising 3 going on here. Certainly after a big move like this, you have to expect some type of retracement. And since we didn't have really news besides the Microsoft news, that's certainly understandable. With the Dow, a little bit bigger move here, but we're still holding up. The moving averages are still holding up here. So nothing of great concern. Market still has a bullish feel to it, but we again don't have anything tomorrow. So we'll see what will rule the day tomorrow. Here is the S&P 500, but the important thing is we bounced off the 5, and we stayed above 1400. So nothing has been violated. We're still short-term bullish. With regards to Apple, I mean, this is a beautiful chart, isn't it? At this point, we need to go ahead and let this retrace back over to the 5. If you're not in it, it's way too aggressive to get in this tomorrow. Not saying that you can't, but that's definitely aggressive entry tomorrow. We need to go ahead and let this retrace over to 5. But you can see if it gets to the 5, buy. If it gets to the 10, load up. If it gets to the 20, trade at your own risk. ACI, we got a nice gap up here. And we said the conservative entry was above yesterday's high. And now our conservative entry is it's up here $63. So that's where we are right now. I'll go ahead and wait for it to get to $63 above this previous resistance. And that is our new entry. So set your alert at $63 for ACI. AGU, we said it was an aggressive entry if we, above Friday's high. We got a gap up, a retracement. And we're in our upcoming segments, we're going to talk about candles and signals and stuff like that intraday. Remember, we use daily charts to signify stocks we want to get in and out of. We use intraday charts to get our entries, our specific entries. So this one's we'll see what happens. I'm going to unflag right now, and we may come back to it. We'll look at MOS and POT and see if we got anything better. And here is Amazon, and we said the safe entry was at the 50, and it's come right down here to it. So keep your alert right around 75, 50-ish. Baidu rallied back up, but we said our safe entry was above the wick, so never really got above the wicks there. So go ahead and confirm your alert at today's high for our next entry on Baidu. CHK, nice move here also. We had our aggressive entry. We got that today. And our conservative entry is right here. And again, look at this. Same thing with ACI, that it's pausing right here. So this is where alerts would be $55. CNX, deja vu. It's all starting to look similar, isn't it? A great entry today. Pausing at our high here. So put your alert right about $90. FCX. Now this one did bounce, and we weren't sure what this was going to do. We said it could go either way, and we said below the 50 or above the moving averages. At this point, I'm going to unflag this one for right now. Let's see if we have anything better, more clear, safer entry. FWLT, hovering here at the support. So you can see how strong the support is, almost getting back. This is another one, a bracket trade. If it gets above today's high or below this support of $63, that's going to be our move. So above today's high or below today's, below $33. Goldman Sachs, retrace back to the 5. So we actually have what might be a safe entry. We got sort of a mad hold pattern going on here. So I would use today's open, maybe 199, as our alert to get back into the bullish side of Goldman Sachs. But be aware that we held up at the 200, and we're showing a little weakness in the indicator. So again, we want to see this at least at 199 before we get back into that. Georgie is something that we introduced yesterday, and we said we were just happy to see to finally get in here at the right time. My only concern with Georgie at this point is that you can see once it breaks away, it usually pulls back. So tighten up your stops if you're in it. And for right now, I don't feel safe getting in this stock tomorrow. PCU, nice gap up. And even though this one's gapped up like FCX, I do feel better about this one. So we can put our alert right around 119 for a move to catch this move higher up to 126. We'll keep this one. RIG also got a nice bounce as oil has moved. Keep your alert at today's high. Some power below the 50. Still got some room to go on this one. So put your alert at today's low. USO breaking into new highs. So put your alert at the high of the day. VMW, going to unflag it. WLT, awesome. Going to unflag it because of a great move. And X, going to unflag this one because of the great move. Okay, and you guys know now is the time for our education portion of our video. And we've been focusing on the book Trading in the Zone by Mark Douglas, A Shift in Mental Analysis. And yesterday during our weekend rapid report, we were talking about that it's much, much easier to derive or figure out that the problem that we're having with our inconsistency as trader is external. It's the market. Rather than looking internally and deciding that the problem with our inconsistency is our perception of the market. And Mark Douglas goes on to say that understanding controlling your perception of the market information is important only to the extent that you want to achieve consistent results. So what does that mean? When you're able to control your perception of the market, you're able to control how you interact with the market. You're able to perceive the market as a whole and interpret the data, the movement of the market consistently and, more importantly, properly. Your fear is no longer skewing what you see as you interact with the market. So obviously we need a technique to achieve consistency. Obviously here at Accendo Traders, we believe one of the main factors to this consistency is trade plans and developing a trade plan personalized to you. But he goes on to say, well, what's the technique? This is truly one of the most perplexing aspects of learning how to trade effectively. What is the best way to achieve consistency in the market? Well, this is the oxymoron because the market is inconsistent. The market is day to day, just different data, different ticks going all over the place. It's never the same thing. You have to remember that the market is, we have a buyer and a seller. When you sell your option or you buy your option, or you sell your stock or buy stock, the market maker matches you up with a trader on the other side. Well, who knows what that trader on the other side is thinking? Also, you may see if a stock is under bought, and this is a great time to buy, and that person on the other side of the country thinks it's oversold and they're selling. We can't control what other people are doing. We're all X. None of us are the control variable in this experiment. We're all variables. We're all, we're all doing what we perceive, and our experience, again, determines how we perceive the market. So because of that, the market is inconsistent. The market is all over the place, and we can never guarantee the outcome of our trade. And so we're back to that theme of the hardcore reality of trading is that every trade has an uncertain outcome. Can you accept that? That's where we are. That's what we've been building on for the past 2 or 3 weeks. So how do we achieve consistency? Well, let's talk about that tomorrow. As always, to get the full version of our video trade plan, go to get our podcast version. Thank you for those people who continue to provide us feedback. We greatly appreciate that. And as always, you can visit our blog. We already have a lot of information about trade plans up there for you can go to start designing your own. Trade at your own risk, and I will see you tomorrow.